What's up, everybody? Welcome back to the Clover channel. Today we're going to talk about why do we trade penny stocks. So why do I like penny stocks? They're small, they're not looked at by big institutions. There's a lot less mumbo jumbo in them where we can get a high percentage return with a less amount of capital. And that's why it's so lucrative, because if you can make 30% on a position and you put in $1,000, that's $300 right there. There's really no place in big caps where you can do that. Like Apple, it's going to be very tough to put in $1,000 and make 30% within a few minutes or 30 minutes or even a day. Very few.
Almost impossible, right?
Yeah.
Fact of the matter is, no big chip stock is ever going to move 1,000%, and that's maybe an exaggeration, but Apple's never going to move 30% in a day, and if it does, it's one day in the history of Apple's movement. Whereas in penny stocks, you do experience a ton of volatility, and although that can be dangerous, if you study it, it's predictable in terms of which way it's going to go, and that's where, for small accounts, if you're dealing with 15, 30, 50 cent stocks, like you can buy a lot of shares and really move your account in the right direction. The fact of the matter is, big chip stocks are not good for small accounts. You're never going to be able to grow a $1,000 account, like you said, buying Tesla. It would take an exceptional market.
Along with using the Apple example, if you caught a 30% move in one day on Apple, that'd be like the biggest move in Apple's history.
Record setting.
Yeah, in small caps, I'm looking at 30% minimum. If stock's not even up 30%, like I don't really care too much. Like the volatility is there, but again, it's a double-edged sword, right? It could be the reason why you also lose 30% of your account in one day, and that's why the risk management is important. But once that's kind of contained and understood, it's all to your advantage and more versus Apple, which you'll maybe get 30% a year.
And that is the predictability, right? We've talked a lot about why if you have a small amount, you can gain much more than a big cap. But what about the predictability? Is a big cap more predictable than a small cap? And the answer is no, because with a big cap, you have all this institutional money and you have all this economic data and you have all these
30 different analysts.
All these press releases. You're playing
They're
against
competing with billionaires.
Yeah, you're competing against billionaires. Small caps, you're competing against us. You're competing against our rich man. You're competing against
anyone
people
with a Robinhood
account, Wall Street bets, people who are watching YouTube, people who don't have enough money to buy a large cap. That's who you're competing with.
And I'll take it even a step further. I was thinking about when we were all talking was, why did I trade OTCs at the very beginning instead of listed stocks? Like not even just small caps, but like OTC, pink sheet, penny stocks, is because there's even less of those people. You are only competing against like regular people who are trying to trade the crappiest of companies for the once in a lifetime miracle 1% stock goes to $100 in 20 years.
The lottery.
The next Google.
And it's a lot easier to predict the patterns on those than it is to what is Microsoft or Amazon.
Well, 99.99999% of those stocks are never going to become Microsoft, Apple, or Google. I mean, the only penny stock to ever make it was True Religion.
Now, let me take it another step further. Why do institutions and hedge funds not want to play small caps? Because they're small. They have billions of dollars.
That's what she said.
They're not going to turn $1 billion. They're not going to throw it into a $1 stock with like a $20 million market cap and then turn it into $2 billion.
You 20 exit overnight.
It's just not going to happen. So it's not lucrative to them. They're not going to make the money that they want to make from it. They maybe make 1 million from it. What is that to $1 billion?
For those maybe for true, really early beginners, like what is a penny stock in general? I think the general definition is anything under $5. But also beyond that is like market cap, which is the amount of shares available traded times the price. So like there could be a penny stock that we would deem at $20, but it's because it has a very small amount of shares traded in their float that only makes it a $100 million company. $100 million sounds like a lot, but when you realize that $100 million is like 2,000 apples, it's like Apple Inc., right? It's like, whoa, okay, that's very small, even though we think it's maybe high price at $20. Vice versa, I forget what bias it's called. It's like, that's not sunk bias, but like lower price bias, where because you see a stock that's like sub penny, where it's like 0.001, it's not even 1 cent. Think it's like, oh my gosh, this is great. A 0.001 cent stock could actually be a bigger market cap than a $10 stock, but the $10 stock has to have a super low float, and the 0.001 stock has a billion share float. So that's a key distinction and difference to make, where we have a general price from 0 to 5, but we can trade anywhere from 10, 15, maybe even 50. If it started at 5 and went to 50, I think we're all trading it, or at least watching it to some degree. So that's the kind of general area.
I think keep in mind reverse splits, right? If you don't know what that is, Google that right now and pause the video. With reverse splits, the stock could be 10 cents. The next day it's 20. Has the same market cap. That just proves to you.
So that's why we trade penny stocks. Another reason I like to trade them is all of the new technology and trends and innovations are usually piece of crud tickers. I mean, one of the better examples is marijuana. All of these companies, marijuana is not legal in the US as of the filming of this video.
I mean, it's legal, right? It's totally legal.
distribution networks are not set up, the banking system is not correct. So all of these companies are historically failing. That doesn't mean marijuana stocks don't have moments of volatility, that they don't have great press releases and great promise and are moved by legislative bills. And whether it's marijuana, whether it's Bitcoin, whether it's AI, and a number of other themes and trends,
electric
COVID, vaccine
vehicles.
stocks, yeah. You just get to research about such interesting trends and not necessarily go down the rabbit hole, because I understand that most of these companies are never going to make it and they sell crud products. But it's kind of interesting to see what these products are and then even see them in the real world. It's more of like the journey and not the destination, but it's just fun to research these stocks, get a deal of what's moving and why.
Well, anyways, guys, that's what small caps are. That's why we trade them. Again, like and subscribe. What do you think? Do you like big caps? Do you like mid caps? We didn't even talk about mid caps. They're mid caps in the middle. We like small caps. That's why we like them. Anyways, like and subscribe. We'll see you in the chat room if you're not. And get in the chat room if you're not. We'll see you next time. See you, buddies.